This video compares two software tools. An AI voice walks you through everything clearly. Infinox positions itself as a flexible, execution-focused broker, designed to serve both retail and more experienced traders who want choice without unnecessary friction. The platform supports MT4 and MT5 across desktop, web, and mobile, giving traders access to forex, indices, commodities, equities, and cryptocurrencies through a familiar trading environment. Execution is built around ECN and STP models, allowing traders to choose between tighter spreads with commissions or commission-free pricing with slightly wider spreads. Liquidity depth is a strong point here, with fast order execution and minimal requotes during normal market conditions, which appeals to scalpers and intraday traders. Infinox also supports advanced tools like copy trading, VPS hosting, and automated strategies, making it suitable for traders who want to scale beyond manual execution or run multiple systems simultaneously with consistent performance. The advantages of Infinox include platform reliability, competitive spreads on ECN accounts, flexible leverage options, and a wide selection of instruments across major and alternative markets. Multiple account configurations allow traders to adapt the setup to their strategy rather than forcing a one-size-fits-all structure. Customer support is frequently mentioned as responsive and helpful, particularly during onboarding, verification, and initial funding stages, which reduces friction for new users. On the downside, higher leverage may not be suitable for inexperienced traders, and some users report that advanced tools and integrations require time to configure properly. While the platform is well-rounded from an execution standpoint, it does not heavily differentiate itself with proprietary analytics, built-in portfolio intelligence, or deep institutional research layers. Infinox was founded in 2009 and has steadily built its reputation as a global broker focused on execution quality and account flexibility rather than aggressive marketing or promotional gimmicks. Over time, it expanded its regulatory footprint and product range, positioning itself as a mid-tier broker that balances accessibility with professional trading features. Its growth has been gradual and consistent, appealing primarily to traders who value platform stability, transparent trade execution, and predictable trading conditions rather than social trading hype or short-term bonuses. Pricing reflects that flexibility. Traders can choose between STP accounts with no commissions and ECN accounts where spreads are tighter and commissions apply per lot. Minimum trade sizes start from micro lot levels, making it accessible for smaller accounts, while leverage options vary depending on jurisdiction and regulatory restrictions. Account types include individual accounts, joint accounts, and corporate accounts, allowing both retail traders and business entities to participate. There are no hidden platform fees for standard trading activity, but optional services such as VPS hosting, premium add-ons, or enhanced execution tools may carry additional costs depending on usage. Overall, Infinox pricing structure prioritizes transparency and choice, allowing traders to pay for execution quality rather than bundled extras they may not need. HugoFX takes a radically different approach, positioning itself as a high-risk, high-flexibility broker aimed squarely at speculative and experienced traders who prioritize leverage, crypto funding, and minimal onboarding friction over regulation and safeguards. The platform operates on MetaTrader 4, focusing primarily on forex, indices, commodities, and cryptocurrencies, with execution designed to be fast and unrestricted rather than heavily filtered. One of HugoFX's defining features is its acceptance of cryptocurrency deposits and withdrawals, which allows traders to fund accounts quickly and operate outside traditional banking systems. The platform also advertises extremely high leverage, making it appealing to aggressive short-term traders and scalpers who are comfortable managing elevated risk. From a functional standpoint, HugoFX offers a straightforward trading environment with minimal account restrictions, low minimum deposits, and simple platform access. Traders can open accounts quickly, trade with high leverage, and avoid many of the compliance layers present at regulated brokers. This flexibility is the core appeal. However, the lack of regulation introduces significant trade-offs. There is limited transparency around liquidity sources, no investor protection schemes, and no formal regulatory oversight comparable to FCA or ASIC regulated brokers. Pros of HugoFX include fast crypto-based funding, simple account setup, unrestricted trading styles, and leverage levels that are rarely available elsewhere. Cons are substantial and must be acknowledged clearly. No top-tier regulation, limited legal recourse, inconsistent execution reports from users, and heightened counterparty risk. This platform is not designed for beginners, long-term investors, or anyone trading money they cannot afford to lose. HugoFX traces its origins to the late 2000s, emerging during the rise of offshore, crypto-friendly brokers catering to traders frustrated with regulatory limitations. Its growth has been driven largely by social media exposure and word of mouth among high-risk trading communities rather than institutional credibility. The broker does not position itself as a traditional financial institution, but rather as a speculative trading venue. Pricing and account structure are simple. HugoFX primarily offers standard trading accounts with floating spreads and no traditional commission structure, where costs are embedded into spreads. Minimum deposits are low and typically funded via cryptocurrency. Leverage is extremely high compared to regulated brokers. Account ownership is generally individual only, with limited formal account classifications. Additional costs may include swaps, spread widening during volatility, and blockchain transaction fees depending on the funding method used. Looking at independent sentiment, Infinox currently holds a Trustpilot rating of 4.6, with traders frequently praising execution stability, ECN performance, flexible account options, and smooth withdrawals. Common positive comments mention reliable platforms and competitive spreads, while minor criticism focuses on tool depth rather than trust issues. HugoFX, by contrast, holds a Trustpilot rating of 1.4, with many reviewers warning about withdrawal difficulties, execution disputes, and lack of accountability. Negative feedback consistently highlights concerns around transparency and fund safety, with very few neutral or positive experiences reported. Final takeaway: if you want a regulated, execution-focused broker that balances flexibility with long-term reliability, Infinox is clearly the safer and more sustainable choice. If you are an experienced, high-risk trader who understands the dangers of offshore brokers and values leverage and crypto funding above protection, HugoFX may fit that narrow use case, but it comes with serious risks. If this comparison helped you trade smarter and avoid platforms that don't match your risk profile, hit like, subscribe for more honest broker breakdowns, and click the link below to explore the platform that actually fits how you trade.